Okay, everybody, it's me, Gregory Mannarino. Still Monday, April 18th, 2022. This is my post-market wrap-up. What a freaking day in the Freak Show, and we do have a lot to talk about. I got 3 charts I made for you, and we got some interesting, well, I don't know if you want to call this news, warnings, threats, promises, maybe. We heard from the World Bank today. We heard from CITIGROUP, Goldman Sachs. I want to cover that. We also got some more information on inflation and what the Fed may or may not do at its next meeting. So a bunch of stuff. Let's start off with the basics here. An extremely volatile market. Stocks earlier, higher across the board, looking just fantastic. The Dow Jones Industrial Average up about 170 points at the high. Well, the markets reversed all that, finished in the negative slightly after what came out of the mouth of the World Bank, which we'll talk about, I just said it, CITIGROUP and Goldman Sachs. You know, again, these are promises, threats, warnings, whatever it is. Look, you and I, we already know, but we're going to cover it all just so we can laugh a little. Yeah, how about that? So on the back of the market here, you know, giving up earlier gains, you're watching that 10-year yield, people, 2.87. Yes, this is rattling people. They're all afraid. They're so scared. They're scared. No, you and I realize where this is going. We're going above 3, so just be ready. What else can I tell you? Be ready. Lots of bears crawling out of the woodwork here, and you know my take on that. Look, when people get afraid, that's when you strike, okay? There is nothing going on right now that is warning us seriously of an impending market crash, okay? So with that said, let us move forward. The dollar today, the relative strength of the dollar, markedly higher. Dollar put almost 0.5% on. That's huge when you're looking about currencies' relative value to each other, all right? Even with that, gold and silver put on decent gains today. Cryptocurrency turned around, and Bitcoin has now resumed its, is now back at about 41,000. We've been here for a long time with regard to Bitcoin, and I always refer to Bitcoin because it's the granddaddy. It's the one that everyone pretty much watches, and all the other ones kind of just follow mommy, mama. You got to have a little fun here, people. You got to have a little fun. Anyway, so, you know, before we talk about the World Bank and Goldman Sachs, CITIGROUP, let's talk about this. So we found out today, I had to get that out first. Inflation continues to surge. Commodity prices continue to skyrocket at their fastest pace ever. This is lovely economic news. Now, on the back of that, it appears that there is a rising possibility that the Fed is going to raise the federal funds rate 50 basis points. So, again, I told you as we got closer to the Fed announcement, which they already know what they're going to do with regard to monetary policy, a couple of weeks, we will reevaluate the situation. I said more than likely it was around 25, but looking at the current environment, surging inflation, again, they're going to push the lie that by raising rates, raising the federal funds rate, the overnight rate, it's going to miraculously stop inflation. Nothing could be further from the truth, and I want to show you some charts here, but it looks to me at this point that we should be expecting, and the market's pricing it in. This is why we're seeing that 10-year yield here, 2.87. The market's pricing in a 50 basis point hike. I think, at least at this point, that is the most likely scenario. Let's see how it plays out. Now that I've said that, and before we move on, I want to show you a few things. And I made these lovely charts for you. I love charts. So, we understand that the Federal Reserve's balance sheet is larger than the GDP of most countries on earth. Did you know that? Well, now you do. This is just 1 year of the Federal Reserve's lovely balance sheet. This is where they were supposed to have tapered. As you can see, it's pretty much a straight line. So the Fed's balance sheet continues to balloon. Keep that in mind real quick. This is the money supply going all the way back to 1960. Look at what's going on here. This is where we are today. So not only do we have a ballooning money supply, okay, we have the Fed's balance sheet ballooning. Keep those two charts in mind. Now, this is a lovely chart of the money velocity, also going back to 1960. Most of you weren't even born. I wasn't even born in 1960. But this is the money velocity today, or the rate at which cash is moving through our economy. We're dead. This is historic, what we're seeing here. You want to look at that again? Have a look. Now, we've been told the lie since, I don't know, Obama, all through Trump, and the current freak. Our economy is booming. We're so strong. Really? How can that be when cash is not even moving through our economy? You see, what they won't allow you to know, and I've covered this before, it is impossible. It can't happen. You can't have an economic boom or recovery or anything like that unless the money velocity is moving up, the rate at which cash is moving through the economy. So, that blows that whole theory. But what I want you to take away from what I am showing you is the hyper-ballooning money supply. And again, tell me, how does a newly created dollar get its value? Is it automatically worth $1 once the Fed prints the pretty picture? Is it worth $1? Or when they add digits to a screen, are those all worth dollars? No. Every dollar created must steal value. Steal a fraction of a fraction of a fraction of a fraction from every other existing bill to gain some purchasing power. And when it does that, it actually creates more inflation. Duh! So what do you expect here? Okay, you think inflation is going to slow down anytime soon? Are you buying the dog shit, cat shit, freaking bird shit narrative of it's this is not only it's not transitory anymore, but we're peaking. We're peaking. Inflation is peaking. In no way, shape, or form, people, are we freaking peaking here with this shit going on. I mean, let's just have some more fun. Let's put these together. That is the Fed's balance sheet ballooning, and that is the money supply. How's that look? Lovely. And don't forget, no money velocity. We are seeing, ponder this. Are you ready? You and I, and everybody else, is seeing inflation surge, commodity prices skyrocket, without cash moving anywhere. All right? So we haven't seen nothing yet. Wait till the money velocity starts to actually move here. All right? And when is that going to happen? I've already told you this for years. Meltdown, implosion, or blowout, according to the European Central Bank. We're going to see a blowout in bond yields. Remember that, ECB? Well, they're calling it a blowout. I'm telling you it's a meltdown or it's an implosion. When that happens and yields really start to spike and cash is ripping, bleeding, surging out of the debt market, putting pressure on the stock market, cash is going to move in a big way into commodities, people. This is why I've been telling you, you need exposure here. You need gold and silver. How do I look like this? I can't see myself. I can't wait to see what that looked like. Anyway, look, nobody knows what's going on better than you do, people. Now let us move forward. So the World Bank today, we got a warning. Very scared. I'm very frightened. World Bank is cutting again its global growth forecast, people. Really? You mean we're not booming? Our economy isn't fantastic and fabulous and tremendous? You mean somebody's been lying to us? Oh, really? Yeah. So not only are they cutting their growth forecast, they're expecting, this deserves a duh, global debt to continue to expand. Really? Oh, I'm so shocked. And they're expecting food inflation to worsen. Oh, you mean We're going to be in a food crisis and probably have a shortage of food. Yeah, I think that's happening. No joke, people. As well as an energy crisis, full blown, full on. You're watching crude oil surging higher again today, people. So that's the warning from the World Bank. Now, Citigroup and Goldman Sachs. Golden bowls of sack. Golden sack ball sacks. Can I say that? I don't know. Well, the golden ball sacks, they are saying, maybe they'll have these little cups on their scrotums that are made of gold. What do you think? Goldman, gold ball sacks? I have no idea how they keep these things on, but maybe a little crazy glue. Anyway, with that said, this is what we got. You and I, over the next 24 months could expect recession and stock prices to fall as much as 20% from about where we are now. Okay, lovely, fantastic, and tremendous. Let me ask you, while we're friends, right? Does any of this surprise you? Are you not expecting everything that we just talked about to actually occur? You know why you're not? Because we talked about it way before. You and I are so freaking far above the curve. We've created a new standard here because we know exactly what's going to happen. We know why it's happening because we know the big picture. It's just not going to stop. But the propaganda ministry, the freaking whatever those things are, they're going to continue to lie to you, distract you, propagandize you, distract you. But it's all, look, you know I always tell you the truth is hidden in plain sight? Do you know where these charts are from? The Federal Reserve's own lovely website. You can find them yourself. Yes, you can. People, you can't make any of this stuff up. It's just freaking impossible to do. Anyway. What do you think about all this? World Bank, Citigroup, gold ball sacks. We're going to call them gold or golden ball sacks. I don't know. You let me know. Anyway, that's it, people. I think we've covered it all, at least for today, before I have a freaking meltdown. This guy right here loves all of you a lot, and I mean that. I will see all of you in the morning. Please comment. I will read the comments. I promise. And, well, that's it.